This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the PremiereTrade Forex Report with Scott Norse.
Good afternoon, traders. Scott Norse here, wrapping up the day and the week for you. Today is Friday, January 24th, 2008. The primary driver of all financial markets this week was fear, and for a good reason. Following a three-day holiday weekend in the U.S. for Martin Luther King Day, stock traders returned Tuesday morning to a very red futures market. Luckily, Ben Bernanke and the rest of the FOMC came to the rescue with an emergency rate cut to the tune of 75 basis points before the open in an effort to stop the bleeding. It worked. Despite being in negative territory for the day with just a couple of hours left, the Dow will likely have a positive weekly close unless it turns into a bloodbath. The dollar has not been quite as lucky, however, given the rapidly declining interest rates here. Of course, we do not expect the greenback to find itself back on that slippery downward slope just yet, not as long as traders stay fearful of a global slowdown. Meanwhile, the yen still looks like a winner in the big picture, although it ran into a little trouble this week with the rebound in stocks. The Bank of Canada also cut interest rates this week, while the RBNZ left rates in New Zealand at all-time highs. Canada said rates will probably continue to come down, while New Zealand said inflation is the primary concern. Central banks are much divided still, considering how tight credit conditions have become for most industrialized economies. ECB member Axel Weber assured markets this week that the central bank was not going to lower rates, and any speculation of such a move was merely wishful thinking. Most traders are questioning how long that hawkish rhetoric can really last. With central banks around the G7 on so many different pages, we can only imagine that volatility will remain high and trading will be exciting and fast-paced. Now to the big picture. Helicopter Ben lived up to his old nickname this week as he and the FOMC called an emergency meeting to slash rates. Bernanke earned this nickname years ago when, citing Milton Friedman, he said that one way to fight deflation was to drop money from a helicopter. With deflation definitely not a concern right now, it appears as though Bernanke is applying this theory to slowing growth and/or falling stocks as well. This week's cut was in response to a Tuesday morning bloodbath in the futures market, indicating the bottom could really fall out of the stock market if something wasn't done. Of course, even after the huge emergency cut, traders are looking for yet another 50 or 75 basis points next week at the Fed's scheduled meeting. Furthermore, the government is sending checks out to nearly 140 million households to get people spending. Where does this leave the dollar? Well, given the choice, the U.S. government will certainly choose to debase the dollar before allowing the economy to enter a recession or the stock market to crash. Of course, in the immediate term, we see fear take over and interest rates aren't really a concern. The dollar is holding up well as traders dump high-yielding carry trades and throw money at U.S. Treasury notes. But this will only last so long. Eventually, the dust will settle, panic will fade, and the market will see U.S. rates below 3% and an economy that has a tough couple of years ahead of it. Currencies with sound fundamentals may not even need an interest rate advantage over the U.S. at that point. If other economies are not slowing down dramatically and/or following us with big rate cuts, there's little reason to expect a big recovery in the dollar, as so many have predicted for this year. Dollar bulls better hope oil's at 60 by December, possibly our only saving grace. Till next week, have a great weekend. Take care.